Yo, what's up, everybody? Thursday, September 25th. I'm down here by the marina. Nice, right? Got some music in the background. They're doing karaoke. Maybe I'll go there and sing a number. I used to be a big karaoke guy back in the day. I haven't done it in a long time. All right. A little bit of a down move today. Still got to flush out some of that bullish sentiment that built up last week. I looked at the AAII survey this morning. Had a small decline in bearish sentiment, but that's still elevated, and bullish sentiment was the same as it was last week. I believe 41.7%. So that's still a little bit high. And the fact that bearish sentiment dipped a little bit, like I said, I sent out in an email, we could have some more little downside consolidation. Now, you know what what I spoke about yesterday was I have concern about the tariffs and the amount of fiscal drag that they're putting on the economy. So we're doing $30 billion a month now, and that's without all of the tariffs. I think Trump is still negotiating with Xi on the Chinese tariffs, so that has yet to hit. So $30 billion a month, you're effectively wiping out one entire Social Security payment, actually a little bit more. I mean, these Social Security payments, they're usually like $24.5 billion every week. So you're essentially wiping out one Social Security payment. So a quarter of all Social Security is being wiped out from the tariffs. That's a big deal. Now, we haven't really seen it show up in net transfers, although the numbers I ran yesterday, it did show a very noticeable drop. But I need more data, especially I think next week's first of the month payments for October. I need more data to make a determination on that. So today, second quarter GDP was 3.8%. This cracks me up, folks. And I sent out an email on this today calling it Rearview mirror investing. And it's amazing to me when I look at it how many people actually operate under this kind of a behavior where they will react. I mean, we're almost in the fourth quarter right now, and they're putting out second quarter GDP, and it was strong. But I mean, I was saying that back then, and I said that fiscal flows were so strong that we're going to have good GDP and we're going to have good corporate earnings, and that's exactly what happened. But you know what I've been saying lately, that there's a risk because of the tariffs and because now of the rate cut. Don't forget, that still has to trickle through. So, but anyway, this rear view mirror investing, like they're looking at a number from basically 2 quarters back, and they're reacting on that. So the thing that stuck out to me the most was they were selling the bond market on this 3.8% GDP. I mean, again, this is rear view mirror thinking. This is seeing a number that's practically 2 quarters old, 6 months old, and then jumping on a trade based on that. Folks, the whole name of this game is trying to ascertain what conditions are going to be like in front of us, ahead of us. That's how you get the jump on everybody else. That's how you are able to put on a good position at very low risk and really cash in from it. It's like when I said back in 2022, you got to buy gold. You got to buy gold. I was pounding the table on that gold trade back then. I was saying, I have never seen gold producers with such a minuscule short. They were almost flat. I think their net short position in 2022 got down to like 6,000 contracts. Okay? When normally it's like 50, 60, 70,000 contracts net short. And we were about to go into this whole rate increase period. And I was saying, look, that's going to end up being a major fiscal transfer. That's going to end up increasing fiscal flows significantly. You got to buy gold. And now when I look at what they did today in the bonds, this is just, it's a gift. How many times have I spoken about this, where you need to take advantage of lack of knowledge, ignorance. You need to take advantage of emotional behavior. You need to take advantage of crowd think. And that's what this is. I mean, they've been conditioned that when they see a number, they will react to it without any regard whatsoever as to what that number reflects. That reflects economic activity in the second quarter. We're going into October right now with possibly some significant increase in fiscal drag. Again, I gotta, let the numbers play out a little bit more, but I'm just saying, like, to me, that bond sell-off today where they pushed the yield up on the 10-year to like 418 or something like that, that was just a gift. That was an incredible gift. How many times will I say that? They literally hand you their money on a silver platter. It's your duty to take their money. It is. You're doing a major service to the economy, to the financial markets, when you react against that and you take their money. It's very important. Don't think like you're not contributing something, because you are when you operate in that fashion. Take their money. Go against ignorance. Go against behavior that's kind of irrational. I mean, that's literally like driving your car looking in the rearview mirror. That data is 6 months old, and they're reacting on that. And that's the kind of analysis, if you want to call it that. That's the kind of instruction that is pushed out there, and that comes from everywhere. I'm sure you had guys on CNBC. I don't watch it, but I'm sure you had guys on the financial shows today, CNBC and Fox Business, talking about that stuff with no regard whatsoever for the forward outlook. Like, what does that have to do with the forward outlook? Can you imagine if investing was that easy, that all you had to do was sit around and wait for a number that reflects economic activity from 6 months ago, and then you just make a bet and you clean up? I mean, think about it like that. And we all know that's not the case. We all know it's not like that. You got to be savvy. You have to have an understanding. You have to control your emotions. You have to be disciplined. You have to have patience. All of those things. So, yeah. Look, next week we get, hopefully, like I was saying, we don't know if there's going to be a government shutdown. I read something today where Trump is notifying his agencies of potentially very large layoffs if there's a government shutdown. I think he's putting that out there as to scare the Democrats into making a deal. But we'll see what happens. I went back and I looked at some past government shutdowns, and if they don't last for an extended period of time, the damage to the economy is minimal. I mean, we've had a couple of them in the past. The longer they last, the more important they are in terms of the reduction in fiscal flows, and that would be a problem. And it would be a double problem given the fact that we have these new elements of fiscal drag coming from the tariffs and now the rate cuts. The rate cuts are going to take a little while to trickle in, but I'll start to see the numbers in the data. Got a shadow there. I'll start to see the numbers in the data starting right away. You know, when I compile the report this weekend, I'll be able to see already what's happening with T-bill interest. That'll start popping up pretty quickly, and we'll already be able to determine a trend on that. It's going to be down. You know, T-bill interest is already down 42 billion. We'll see how much additional this recent rate cut is going to add to that. I'm sure it's going to accelerate the contraction in T-bill interest, the drop in T-bill interest. So just like on the way up, when rates were going up, it took a little while to hit that inflection point, and I kept warning about that. I said, you know, we got to be patient. We're going to reach an inflection point where the negative impact from rate hikes on financial assets is going to be offset by the increase in the fiscal flows. And I gave the exact date of that inflection point. That was October 16th, I believe, if I remember correctly, October 16th, 2022. That's when it happened. And that was the exact bottom of the sell-off, the rate hike related sell-off at that time. I gave you the exact bottom. So that's the update from the marina. Maybe I'll go sing a song. What were your favorite karaoke songs if you did it? Mine was I Did My Way, Frank Sinatra. That was my big number, man. Brought the house down. I got really good at that too. So if you ever did karaoke, post it up here on the comments what your favorite song was. Anyway, that's it for today. Thank you for watching. Please like and subscribe the video. And don't forget to go to my website, pitbulleconomics.com, and sign up for a 30-day free trial to MMT Trader. See you tomorrow. Bye.